Hello there. Welcome back to Introductory Accounting Info. In this video, we're going to look at the question paper of November 2023, and we're going to look at question 2 on that question paper. We are only going to look on part of the preparation of the bank reconciliation statement. So the question reads, the following information appeared in the books of Kundai Cakes from Yeven on 31 May 2021. And then on the second point, prepare the bank reconciliation statement on 31 May 2021 to reconcile the balance of the bank account with that of the bank statement. So we are just going to concentrate on this point on the preparation of the bank statement, bank reconciliation statement. So I remember when you're preparing the bank reconciliation statement, you are just trying to reconcile the balance of the bank statement and the balance of the bank account in the ledger. So what we have here is we are given the opening balance of the bank statement of the bank statement that we are going to start with in the bank reconciliation. So if you go at the beginning of the question, we are given that balance is the bank account, the debit balance of 145,879 rands. So what does it mean? It means that if it is a debit balance, it means it's a negative balance. And also what we have to take note is that what we have on the debit side of the bank statement is the same as what we have on the credit side of the cash book. So, or what we are trying to say is what is on the debit side of the bank statement represents the cash payments journal, and what we have on the credit side of the bank statement represents the cash receipts journal. So when we are reconciling, take note of that. So we go through the transaction and pick the transactions that are only affecting the bank reconciliation statement. On the second part, a comparison of the bank statement with the cash receipts journal. Cash receipts journal and the cash payment journal on 31 May 2021 revealed the following differences. On the first part, 2.1, the bank statement from Canara Bank showed a favorable balance of 360 5,785. So this is what we have. So this is the bank statement balance that we are going to start with, and we are being told that it's a favorable favorable balance. So what does it mean? Remember, the bank statement also has a debit and credit balance. So when we have a favorable balance on the bank statement, it means it appears on the credit side. So we're going to put it on the credit side. So we're going to start by going through to the answer section and put it on the credit side as an opening balance. So if you go there on the answer section, we have got the credit balance as the bank statement. And remember, the figure that we are given there is 365,785. So we are saying 365,785. So this is what we have. Then we can go and check out on the next transaction. So what we're going to do is to identify whether the differences that we have, is it affecting the donors or the bank statement? If it's affecting bank statement, then we're going to adjust them. Then 2.2, the following checks had not yet been presented for payment on 31 May 2021. So what does it mean? It means these checks in the journals, they are appearing, but on the bank statement, they are not yet presented, which means they are not yet there. But obviously, they are going to reach the bank. They are along the way. That's what it means. So they are not yet processed in a way. So what we are saying is we are just going to put them since we are having that they are not yet presented. So we are going to put them on the debit side of the bank statement. So not yet presented checks, we put them on the debit side of the bank reconciliation statement. So we're going to pick check number 121, 169,000 on the debit side of the bank statement, and then check number 126 again, 148,000, and then check number 127 again, 175,164. 175,164 rand. So we're going to pick all this, and they're going to go to the debit side of the bank reconciliation. So we're just going to go there, and we summarize it as a debit outstanding checks. So here we are saying debit outstanding checks. And then on the outstanding checks, we have got a check number 121. So we can such say number 121. And the amount that we're having there is 169,000. And also we have a number, check number 126, which is 148,000. And the next one is check number 127. And the amount is 175,164. 175,164. So this is the summary that we have in terms of the outstanding checks. So we go again to check on the next error to see does it affect the bank reconciliation. 2.3 check number 212 to the value of 37,243 sent to Cook's Bakery as payment of our account must be cancelled. This check got lost in the post. So this one is an error that is affecting the journals. It's not going to affect the bank statement. So we're going to leave this one. So we go to the next one. 2.4 reads a single settled DA account by depositing 63,700 directly into the current account for Kundali Cakes from Heaven. So what does this mean? It means this transaction is appearing on the bank statement, but it's not yet in the journals. So the journals is the one that needs to be updated. So we can leave it again. We go to the next one. 2.5, the bank statement of Kundali Cakes from Heaven displayed the credit entry of 169,857, but it was for another client for Canara. It was for another client of Canara Bank. So what does it mean? It means on the credit side of our bank statement, we have got 169,857, which does not belong there. It's money that was deposited into our account. Remember, when money is deposited, our bank statement is credited. So we have to remove this amount. So by removing it, we go to the opposite side, which is debit side. So we're going to debit a bank error. So basically, that's what we are going to do. So we go there and we say debit bank error, which is 169,857. Then we go again to the next transaction to see what do we have. This is 2.6 now. The current account of Kundali Cakes from Heaven was not yet credited with a deposit of 289,261, which was made on 31 May 2021. So what does it mean? If it's presented like this, it means this deposit does not have any problem. If there's a problem, the explanation will tell. So in that case, if it doesn't have any problem, it means we are going to enter it. The explanation is actually highlighting that this transaction was supposed to be deposited, but it's not yet deposited. So it means it's along the way it's going to be deposited. So we are going to enter it now on the credit side of the bank statement as 289,261. So it's just an outstanding deposit. So we are just going to say, let's try to see what we are going to do. So what we are going to do now, we are now going to say credit balance. Sorry, we're going to credit deposit not yet credited, or we can just say outstanding. Outstanding deposit. And the amount that we have for an outstanding deposit is 289,261. And we are coming here on the credit side, 289,261. Then we can go there to try to see what we have next. Then we go to the next transaction. Next transaction is saying Intesa check of 4,567 in the payment of his account had been retained by the bank marked refer to draw. So any check that is returned refer to draw does not affect the bank reconciliation. It means it was not processed in the bank and it's not supposed to be here on the journal. In the journal, it's supposed to be removed again. So it doesn't affect the bank reconciliation. So we leave it again. Go 2.8, a check to the value of 42,868 withdrawn by the Kundali Cakes from Heaven's head office out of their current account appears on the business bank statement. So we have got 42,868, which is on our bank statement, which is not supposed to be there. Remember, this one is for the head office, so it doesn't belong to Kundali Cakes from Heaven. So it means we are going to remove it. It was a check to the value withdrawn by Kundali Cakes. So it was withdrawn, which means it's on the debit side of our bank statement, which is not supposed to be there. So to remove it, you go to the credit side by putting it. So this is actually a credit bank error. We are going to credit the bank error. It was debited, but not supposed to be debited. So we are going to the credit side. So we go there, and then we say credit a bank error. By crediting, we are now correcting credit bank error. It was a bank error by debiting it. So the amount is 28,000. Let's try to check the amount that we have. It's 42,868. 42,868. We can just try to extend our lines so that we can enter the remaining transactions. Right. Then after that, we go to the next transaction after this. Remember, we are on 42,868, which means we are going to go down and see what transaction do we have next. The next one is saying the bank statement showed a monthly stop order of 37,264 in favor of Santiago Security. This was to pay the owner's alarm system. So what we are going to do here, we are going to this amount does not affect the bank reconciliation statement. Remember, it was entered in the bank. It was entered in the bank statement, but it's not yet in the journal, so it's going to affect the journal. So we can gonna leave it again. Then we go to the next one, which is 2.10. The bank statements showed a debit order of 74,598 in favor of Pollard Insurance as payment of insurance, as well as the bank charges of 56,122. It means this appearing on the bank statement, so it's not going to affect the bank reconciliation. So what is going to be entered in the bank reconciliation is what affects the bank statement. So in this case, it's this one is affecting only the journal. So you leave it. We're going to go to 2.11, check number 212 to the value of 37,243 sent to Cook's Bakery as payment of account must be cancelled.